Uncle Ron stuff. Money. Part 3. Credit cards. Credit card debt. It's cold outside. I'm going to go out there and blow leaves after a while, but in the meantime, I thought I'd start this one. And I've been playing with a computer over here. It had an old dual-core processor in it, and the motherboard would support a 4-core, and I upgraded it, and I've had nothing but problems since then. Um, I think I've got finally all 4 cores going, but I still have a memory issue. Side point. Anyway, in the previous episodes, I talked about how you needed to learn about money and money management and budgeting, getting track of your expenses, your mandatory expenses monthly, and figure out whether you're going in the hole. You probably know if you're going in the hole or not, but nonetheless, credit card debt, long-term debt, car loans, home mortgages, and finally investing, where you have some money and you want to put it to work for you, so it gives you some money back without eating the principal that you put in, and money will work while you sleep for you. You get interest or dividends, or the stock price goes up, you can sell it, get capital gains. Anyway, this one has to do with credit cards. And I think I'm old enough that I lived in a time when there were no such things as credit cards. They came around in the last, 40 years, 50 years. And uh, it was a convenient way to let individuals borrow money. Before that, you might have to go to a relative to borrow money. For example, you wanted to buy a car, you didn't have enough, and so you would have to go to a friend or maybe even the bank, and get a car loan, so on, or to buy a refrigerator, you would have to borrow the money from the bank or someplace else. But you didn't have access to credit like you do with a credit card. Okay, so credit cards came along, and it was one time they used to mail them out to you. You didn't even request it, and they would show up in the mail, and all you had to do was call them or something and activate the card, and then you would have access to a readily available line of credit, which may be $500, $1,000, $5,000. They set the limit on it, and now you could borrow at will. And it's very convenient, you know. On the other hand, that's part of the problem with it. It's so convenient that you don't have to go, you want to buy something and you don't have enough money, and you don't want to wait and collect enough money, so you use your credit card, and that's great. It lets you take care of the immediacy of your need or your whim. And that's part of the problem with credit cards, is they allow a lot of whim buying. And what do I mean by whim buying? All of a sudden you just have this urge, or someplace or another. Examples like buying art. I mean, I have whims when it comes in that area. I'm out someplace, I'm in Utah or Idaho, and I'm run across a really nice, unique piece of art that I haven't seen anywhere else, and I have a whim, and it's like, I have $200 in my wallet, and the thing costs $800. I'll use a credit card. This is not something that I absolutely positively need to pay. For example, the mandatories like utilities and all those sorts of things, and my mortgages. And it's not that. It's a discretionary spending that doesn't I didn't really need that piece of art, but I had a whim. I really wanted it. And we all are infected by that particular virus. You really want it, and you don't have enough money, so you use your credit card. You have instant access to a line of credit where you don't have to borrow from a relative or a friend or try going to the bank and have them say no. They don't tend to let you borrow money at the bank unless you have enough collateral of some kind. And the word collateral means assets that all else fails could be sold off to pay off the debt you owe the bank. Okay. Credit cards. The problem with credit cards is for the right to borrow from them indiscriminately anytime you want for whatever you want. They charge a high interest rate. What does interest rate mean? On a credit card, it's hard to get, like, they're above 20% or 18% or something like that. So if you borrow $1 and you don't pay it immediately back, at the end of the year, you're going to owe $1.18. I think I figured that, calculated that right. Which is, it's not a problem, right? $1, but who borrows $1? They don't do that. You borrow bigger amounts. And each month, they calculate the interest. It is an annual rate, 20%. They calculate the interest on the balance that you're carrying in some weird fashion that you only really know unless you read the fine print of the credit card, which can be 18 pages long, and nobody does that. Okay, and they have various credit cards do it various ways. Yes, there are what's called usury laws in most states where they define what is the maximum credit card type debt interest that can be charged in the state. And credit card companies, they lobby and they resist any kind of laws about the maximum credit card debt that they can borrow. Besides credit cards, there are these payday loan people out there. So you can go in and you get paid on them every 2 weeks, and all of a sudden in week one after you got your paycheck and you paid everything mandatory, you got to get a plumber in, and he's got to be paid, or he won't do the work. So what are you left for doing? You go into, if you don't have a credit card, you go into a payday loan company and they say, yeah, we'll give you the money to pay the plumber, but you need to pay it back the next time you get paid. And for that benefit, we're going to give you the money. They charge an exorbitant annual interest rate, an exorbitant one. It can be above any kind of usury rate the state has. So payday loans don't do that. I mean, some people can't get a credit card because their credit history is bad, and they have to resort to that. But the whole deal is credit cards are very convenient. You have an open line of credit. You don't have to go to the bank. You don't have to borrow from a friend. You can have that access to funds as you need them, and that is really convenient. The problem is that we have a lot of whim buying. Again, I think I talked about it in budgeting and getting track of your expenses. The problem comes in when your income and your mandatory expenses are tight. You're covering everything. You're making ends meet. You're buying food. You have shelter, and you have heat, and you're putting gasoline in your car. Blah 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 blah. But there's very little left over at the end of each month, and you run into a situation where something breaks, or you have to replace something, or a whim buying. You really absolutely positively saw that cute dress, or you need a tool. You're going to fix something and you need a tool, and you don't have the cash in hand, so you borrow it. It's very convenient, and that's the downside of it, is whim buying. And we all do that. The problem is that most of us do not pay the credit card off each month. As soon as you borrow $800, you bought something for $800. It's now an $800 credit card bill. If you pay it off within 30 days, you do not incur any interest. Although that could vary, depend on how the credit card fine print reads. If you pay it off at the end of the month, there's no interest charge. You're okie dokie. If you do that every month, that's what you need to do. If you can do it, you do it. And debt is the first thing you try to pay before you decide you need a new dress or to go out to dinner and drinks with your friends, and you're going to pay and blah, blah, blah. You need to pay off that debt first. Credit card debt, the interest rate is so high. It's one of the things people do. You'll talk about a credit card statement, and it comes in and it'll say, what does the minimum payment due this month? You borrowed $800. The minimum payment due is $30. So you pay $30 toward that debt. You start that process or regime or idea. Well, okay, I'll pay it off. I'll put $30 a month toward it, and they won't stop my credit card and whatever. That doesn't work. You'll never get out of debt that way. Paying minimums is to the credit card company's bureau because they want to keep collecting interest on whatever debt amount of money you borrowed, and that's the best way for them to do it, is just allow you to pay a minimum payment. Do not get in the habit of doing that. You've got to, if you don't have enough to pay the full amount, then you pay as much as you can. And I said in a previous episode, there have been times when I was short per month and I had to use credit cards to cover certain things, and as soon as that credit card debt came in, I had to figure out a way to pay it, and that included, example, cutting off cable TV. I go to an antenna. Kids didn't like it. I didn't go cut it off forever, but until I could get a handle and pay down that credit card debt, that's what I did. I also sold off stuff. I had a guitar I really liked, but I didn't have any choice in the matter. I had to sell it. I used that money, applied it to the credit card debt. You got to take some actions. You can't just let it float. And floating credit card minimum payment debt is a big no-no. You don't want to do that. You don't want to start into that mentality. Credit card debt, credit cards are cool. I use it convenient because I no longer go to the bank and carry a lot of cash. Again, cash is not, it's hack proof. So you could use cash and never worry about getting hacked. Every time you use your credit card out of a business or online, there's a possibility of being hacked. Credit cards can be hacked at a business. It's in somebody's hands. They can write down the number. They can write down the security code on the back. And they do. A lot of credit card fraud occurs by employees working at a particular business. That's the absolute truth. You hand that credit card off to somebody, they disappear. They come back with your bill and give you your credit card. They could have written it all down and use it. And that has happened to me a couple times. And twice with the same company. I was physically there. I used the credit card for a purchase. And 2 days later, I had charges on my credit card from the Irish dating service. Okay? So you got to be mindful. It's not just online. Everybody's afraid, well, I can't use a credit card online because it's going to be breached and I'm going to get hacked and identity theft. That can happen with a credit card you're strictly using at local businesses. That can happen there too. So you got to watch your credit card payment. You should have an account that should be able to watch monthly That's true on your bank account. If you have access these days with internet, you should be watching your bank account in some kind of fashion so you can observe any kind of weird changes or charges or anything like that that occurs. I don't remember writing a check for this. I don't remember ever charging anything at Best Buy in the last month. Why am I seeing a charge there? Things like that happen. You need to keep track of it. In general, I use credit cards to avoid carrying lots of cash. If I go out to dinner, I use a credit card, and I don't have to pull pieces of paper out of my wallet to pay for it. It's convenient in that sense. And yes, there are times that I go places and we're gonna, like a vacation. You're there. All of a sudden, everybody says, well, let's get massages. So, the total massage bill will be $1,500 for umpteen people. I don't have $1,500 cash. I could go to the bank and probably withdraw from the ATM $1,500 worth of cash, and that would probably be the safest way to do it. But I'll use the credit card, okay? Because it has, on my particular credit card, I have a $5,000 limit or something like that. So in situations where you're out traveling, your car breaks down, and you're in Idaho and there's no ATM bank for you around and that sort of thing, you use a credit card. But as soon as you get home, you pay that credit card debt off within the 30-day limit. If you can't, you pay as much as you can. You pay whatever you can possibly pay on it to reduce the amount that's racking up interest every month. Credit cards that cause a lot of people a lot of trouble. I see on TV ads for these companies that'll help you get out of credit card debt. I have 30,000 in credit card debt. I have 50,000 in credit card debt. They get to the point where they can't even make minimum payments and pay all their mandatories, like have food, shelter, and utility, water. You got to have water and heat. Okay, they can't make minimum payments on all those cards, all that debt, and it's just accumulating and accumulating, and it spirals out of control. So there are these companies that will try to do something about that, and they'll talk to these credit card companies. And believe me, credit card companies don't like just writing debt off. They're not going to just, no, hey, you're forgiven. It's not like President Biden who wants to forgive student debt. Well, we just forgive that. Somebody lent money. Somebody expects to be paid back the principal, at least the amount of money they gave you. If you lent you $500, that $500 came from someplace. They had probably investors or somebody else. They just can't forgive the debt. Maybe the interest, okay, well, we'll stop charging the interest. But the principal, the debt amount, $500 you borrowed, we got to get back somehow. So in the case of Biden, when he just wipes out student debt, who pays that? Taxpayers pay that. They have to pay the principal back. Not, there's no magic here. There is no forgiveness of debt. You know, it credit card companies have credit card collection agencies. If you don't pay minimum payments due, you're going to start getting calls from credit card collection companies, which credit card companies use, and they start hounding you. Okay, and it can proceed so far as they'll go to court and they'll say, we have to put a lien on your assets, or a court order that says when you get paid, the first thing you have to pay is us. That happens to people. They get court orders, and usually it's related to divorces or something like that. If you haven't paid alimony payments, you can get a court order that says you have to, and if you don't, you go to jail. These are all aspects of money, and most people don't know about this stuff, and it's like, yeah, you don't need to know. But on credit cards, everybody has a credit card that can get one, and most people can. I had an interesting case. father-in-law had never had a credit card, had no need for a credit card, always paid cash, wrote a couple checks, but not much. Anyway, he came in to quite a bit of money, and so he decided he would apply for a credit card. So the credit card application asks for, okay, what is your employment pay on an annual basis? And he said, zero, because I'm retired. Well, they denied him a credit card. Well, he had a lot of money in the bank, but that didn't count. All the credit card people were interested in is what was your annual income. I'm not sure even they ask like after taxes or after your expenses, how much is your income? Just how much income do you have, i.e., the ability to pay us back. In his particular case, he had no income per se via a job, so the credit card company said no. That's the way it works. So I'm saying if you can get a credit card, then, and there are people who can't. And in fact, there are people who can't even have bank accounts because they don't have enough credit card or history with money to let them do that. And that causes problems because where do you cash checks if you don't have an account? Banks don't even like to cash checks if you don't have an account with them. Okay, side issue. Credit cards, convenient. You can use them. Either that or you go to the bank and get cash all the time. When was the last time you wrote a check at a store for like groceries? I have seen a check, and like 3 or 4 years ago, I saw someone write a check at Home Depot, but I don't think the cash register attendant really know what to do with the check. He hadn't seen one in so long. Credit cards, they're convenient, and that's a good thing. And credit cards are convenient, that's a bad thing. You must pay as much as you can toward your credit card debt every month. It should come before that next meal out. It should come before that next whim spending, that dress, a pair. I really need a pair of shoes. This got a hole in it. I don't care. You need to pay that debt off first. It does not getting you anything if you think about it. Because they lent you money and that's it, you got to pay them back 25%. And you're not getting anything. If you borrow $1,000 and you wind up paying them back $2,000, what did you get for the other $1,000? You got some time. That's all you paid for was time. Beneficial. I mean, you could have had $1,000 to spend on chocolate cakes if you wanted to. If you hadn't spent all that interest. Interest is insidious, and it grows because you have charged interest on interest, which is charged more interest, and it's insidious. An example of that is a home mortgage. Most people have to buy a 30 years mortgage. Buy a house, you pay it off in 30 years. Okay, well, all the time that mortgage is in existence, the interest that is accumulating each month because you didn't pay it all off, now next year I have the debt plus this amount of interest that got accumulated. Interest is then charged on that. So if you borrowed $400,000 and you take 30 years to pay it off, you're probably going to be close to $600,000 or $800,000 out. That's what you have to pay back over 30 years. You may know that, you may not. What did you get for the other $400,000? Yeah, you got a house to live in, but what other tangible assets did you get? Nothing you can touch, nothing you can feel, nothing you can enjoy. It was just for the right to stretch my buying time out over 30 years. That's another issue when I come to long-term debt. This is enough. Credit cards, convenient. Certainly have one. They're great for emergency situations when you're not carrying enough cash or you have your checkbook. That's what they really are handy for. But other than that, you got to be careful because they're really excellent little devils when it comes to satisfying some whim you have. You're out and you saw that cute little whatever, or you're out and, oh, it occurred to me, we really could use a new settee. Oh, that would be great. Time to change all the furniture. I'm tired of it. We've had the same chairs for 8 years. Let's just get all new stuff. We don't have the money for that. Well, we'll just use a credit card for it. Credit cards. You got to understand the ins and outs of credit card. And when you sign up for a credit card, there's a whole lot of fine print. And you need to read that fine print to understand what exactly are they going to calculate monthly interest on. And is there a penalty for paying it all off? Sometimes there are. Other aspects of that. And if you can't understand it, you shouldn't be signing it. Okay? If you can't understand the terms and conditions of the credit card or anything else, you shouldn't be signing it. Take it to somebody else who does know and explain it to you. That's enough for credit cards. This is Uncle Ron's stuff. This is about money. This is part, I think, 3 of money having to do with credit card debt. And today is the 4th of November 2023.